All right, everything looking good. We are live. Let's go ahead and get this party started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on February 26, 2023. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so somebody let me know in the comments everything's coming through loud and clear. But in the meantime, let's go ahead and jump right in, take a look at these charts, see what we got going on here. All right, so starting off with TNX. So we see here last week something crucial happened. We broke above that previous swing high. So the reason that is so important is when we're looking at this chart, we have obviously our cycle high right here, and then we come down and put in a low, and then we switch back to the upside and we put in a lower high, and then we come down, we put in a lower low. So we have a clear downtrend in place. And then once we hit our support level right here, which is the area we were looking for accumulation, essentially once the market hits that level, it starts to push back up. And once it takes out this previous high right here, we no longer have a confirmed downtrend. Now, technically, it's still a downtrend because if we have a high, then a low, and then this is the lower high again, then we're still technically in, a downtrend correction, something along those lines. But the first step to starting to reverse this and start moving back to the upside is taking out that previous high. And then the next step is taking out the cycle high. So we have momentum in our favor. We have the stochastics bullishly up here in the bullish control zone still. Now, we did use a lot of energy to get to where we're at right now, so we have to pay attention. But as we see, we have a high here and then a higher high. Here we have a high and then essentially the same high. Very, very close. I guess technically this one is slightly higher, but I would call them the same. So no divergence or anything at this time. So that's definitely what you want to see if you're expecting continuation. If we go to our longer time frames, and we're going to be taking a look at less charts today, but we're going to look at the longer time frames as well as we come up on our February, basically like monthly wrap up. So here at TNX on the weekly, we see again, this still looks strong. We have a bull trend on the 821. We're above the 200s and they're both bullish, flip to the upside. And we basically were about to flip the bear trend on the 821 weekly. And then we saved that, move back up. And again, we took out that previous swing. So now it looks very, very likely that we're going up here to put in a new high. Now, what I would look out for, or what I will be looking out for, is the potential that when we come back up here to put in that new high, that we actually get rejected on the slope line here. Now, we see that happen all the time. We talk about it all the time, but just while we're here, maybe it comes up here, does a little something like that, comes back down a little, and then comes up, and then eventually gets rejected and goes lower. And that would correspond with basically this continuing down and then ends up rejecting us. So that's basically what we're looking for, potentially. Now, if that doesn't happen, that's completely fine. We'll look what does actually happen. But this is something that we see very, very often where the slope line flips red. We come back up, we test it, we try to reclaim it, but we get rejected and go lower. That also would correspond with, or could potentially correspond with, bearish divergence here as well. So obviously, if that happens going into the future, we're talking about mid-May over here. That would correspond with price action going to a new high right here. And then that would basically give us bearish divergence from our different points. So we don't see any of that yet, but the potential is there. So it's worth paying attention to. If we see a new high here, if we start coming up and then we start running into that resistance, that would be an area where I'm looking for at least like a short term, if not cycle high on yields. So now here on the monthly, this is the most important one. So this is very, very bullish in my opinion. So we have basically a macro low. We basically hit zero on rates. We come up here, we cross the 821 bullish. We have a push, like a pushback down by the bears, it looks like, or we do actually short-term cross bearish again, and then the bulls immediately take back over and we rip. Obviously, we've been bullish the whole way. Now here we are, once we broke above the 200s, we back test them, and then we move up to a new high. We come back down, we retest the 8, and now here we're just literally, we're barely off the highs. The monthly close on the high was 4.1, and we're at 3.94. So, we're there. We're at the highs right now. So the probability of putting a new cycle high, in my opinion, very, very high. Momentum in our favor. Blue slope line on the TJD, TDMACD. And then obviously still inside the bullish control zone. We're doing exactly what we said. We have the pink stochastic right here. We have the 80 level of the bullish control zone right here as well. It starts to look like we're about to roll over. Everybody starts coming out of the weeds talking about buy bonds, yields have topped, rates are over, inflation is done, the Fed has pivoted, and now what's happening right now? They're getting smacked because this is bouncing off of support, which is, we have a bunch of confluence. Basically, we have the pink stochastic, we have the 80, well, it's not a bunch, it's two things. We have two things of confluence. So we would expect that to act at least as temporary support. Again, could we potentially push back up here? Could we potentially have a lower high and then roll over and create bearish divergence on the monthly? It's possible. We'll keep an eye out for it. But right now, when I look at this chart and you ask me, hey, what is the most important thing about this chart? What is like the key observation? The key observation is yields have been in a bear market for, basically since arguably on the retest, whenever, you could get bearish whenever you want. I get bearish based on the slope lines. You can get bearish on the back test. Doesn't matter. But we've essentially been bearish on yields since the mid 80s. So from the 1980s till 2023, yields were bearish. And now, for the first time, we're threatening that trend. As a matter of fact, any month, any single month could literally flip the 200 simple bullish. So that tells us we've been in a declining rates environment for decades, and now we're going into a rising rates environment. So what does that mean? What does a rising rates environment mean? Well, this fueled some of the biggest asset bubbles in all of creation. Obviously we had the mid 90s, 2000, we had, a couple times along the way in between there, 2008, we saw a little action in 2015. We had the 2019, all time record highs on the most speculative stuff. Everything from cryptos, stocks, real estate, whatever, crypto derivatives, NFTs, whatever you want to call it. So regardless here, if this bear market fueled the biggest bull markets in all of history, I would say it's worth paying attention to that. If the bond yields flip into a bull market, and not to mention the biggest bond market in history. I mean, let's not forget about the bond market's been raging for the last 40 years. So that being said, this is a reversal signal of a trend that's been going on for 40 years. Could this come up here, whatever, and then eventually get rejected? We go back into a bear market, we go down to zero rates, central bank digital currency, we go negative with rates, and all this stuff happens. Sure, over the next 10, 20, 50 years. But what's going to happen in the next 1, 2, 3 years? That's what I care about. Because if we're going to see another one of these 10, 20, 50% drops in the stock market or any of these other asset markets that we're invested in or, speculating on, I'm not going to sit here and take it. I mean, you can do that if you want. But, let's be real about what's happening here. This is a switch from a bear market into a bull market. And we're 2 days away from another monthly candle printing and another big green monthly candle printing. So right now, when I look at this, I say, you know what, long term, risk assets are going to have some serious headwinds like we've never seen before. All right, what's going on in the chat? Hex Evolved in the house. Digital Durwood says, sounding good. Mustafa, what's up, brother? Hex Evolved says, quick question. Why is it important to watch a 10-year yield? I mean, you can watch whatever yield you want. I like the 10 because it's kind of like in the middle. You can look at like overnight rates. You can look at the 3-month treasuries. You can look at the 2-year, the 10, long duration treasuries, 30-year mortgages. You can look at however you want. Honestly, it's up to you. The 2 and the 10 are my preferred metric and have been for a long time the preferred metric of, Federal Reserve, economists, like whatever you want to call it. So that's why I like the 210. Oftentimes we'll pull up TLT, which is actually the 20-year. And then a lot of times you'll see, and we're actually going to look at it today, the 210 conversion. I'm sorry, 210 inversion rather. 2 key observations, Bitcoin going to 10K, says Kalma Betty. Yeah, we're still holding out for that, right, Kalma? I hope you haven't been just sitting on the sidelines this whole time. What's up, Yoda? Good to see you. Good evening. Wish I do to everybody. All right. Oh, we got one more. Oh, Jesus. What is that name? Oh, bike rides. Another fantastic update. Awesome, man. Appreciate it. All right, so let's jump in here. So TNX, obviously, we know what it is. Definitely paying attention to this amongst all things. Very, very important. All right, so now let's look at this 210 yield here. So we oftentimes will pull up this chart. There's a lot of stuff going on in this chart. It is a long duration chart representing the 210 weekly inversion of the treasury curve. The most important thing though, again, we see that descending resistance line going back for like 35 years. We see a clear breakout of that line, and then obviously the rocket ship, just like the dinosaur. We know dinosaurs are the beginning of time. The rocket ship is, the moonshot. So if we're going to see yields moonshot, what does that mean for everything else? They obviously, every other asset goes straight to zero, 100%. It's guaranteed. So that being said, now that we know that everything else is going to zero, why even bother looking at the rest of this? I agree. Let's go ahead and call the stream there. So appreciate everybody tuning in today. Hope you guys enjoyed it. No, seriously though. So we have the Fed pivot right here, and that was where the market was pricing in the Fed pivot. And remember, yields were falling at the time. Well, now look, we're past the Fed pivot, and here we are still rising. So the most important thing we're looking at short term here on the chart is when we click on the 10, we can see the 2 inversion is in blue. So naturally, all the time, you should get paid. Longer duration should pay you more money. Because if I loan you money overnight, it's not that risky. If I loan you money over a 5-year period, it's kind of risky. If I loan you money over a 30-year period, it's much more risky. So typically, you'll get rewarded for taking that risk by getting a higher interest percent for locking up that money for a long period of time. So what is happening right now is we're seeing the 2 and 10 or 3 and 2 or, whatever metric you want to see, we're seeing a lot of inversion throughout the yield curve, which means that essentially the market is not pricing yields according to what should happen based on our current reality. So what does that mean? It means either the market is wrong for not believing the Federal Reserve, or the market is right and the Federal Reserve is lying, or they don't realize they're going to have to pivot. Either one of those situations can be true. You can speculate on either one. We could create a valid argument for either one. But regardless of that, the 2 has already broken to a new high. So we talked about the 10 right here on our other chart, and that's represented by our orange here. We took out that previous swing high right here, and we're headed up towards the cycle high, the tip of this orange right here. The blue, or the 2, has already broken out to a new high. So shorter term duration bonds are already saying, hey, rates are higher. Matter of fact, they're not even saying it. They're voting it because they're higher. So that's very, very important to note that just in the last month or so, exactly how we've been saying that the market was going to be wrong, the treasury market was going to be wrong and forced to reprice assets, that is literally happening in real time right now. Now, because it's only the shorter duration, bonds or notes, we're not seeing that reflected necessarily in the markets at the moment. But I'm telling you right now, once the 10 breaks to the upside, once we start seeing the longer duration bonds breaking to the upside, the rates going higher, that's going to tell the market, hey, you know what? You're wrong. Bond market's going to start to plunge again, and we're right back where we started. Does that have to happen? No. This could just roll over, go back down to zero. Everything goes to the moon again. Sure, it's possible. Nothing is certain in these markets. Anyone that says that it is certainly lying to you. That's the only thing you can be certain about. All right, so that being said, let's talk about oil. So oil still looking pretty weak right here, just hanging out at the lows. We do not like to see that. We have a very, very clear support here at this macro fib in green. We broke down from the little ascending channel right there. We now have a high, then a low, then a lower high. We still have a higher low for now. If we take out this low right here and we threaten that previous low, I mean, oil's probably going to be breaking down into the, high to mid 60s. Got to be real careful with this one. Let's look at our longer term time frames. We're going to skip the weekly on some of this stuff and just go straight to the monthly, just so we can try to get a lot of assets in here. So this is our monthly chart. And honestly, when I look at this chart, not knowing what it is or anything like that, and I see a high, a low, a lower high, a lower low, and then we push up here, we take out that previous high right there slightly, but realistically, I mean, it's still just a downtrend. It's still a macro high, a macro low, and then a lower high for now. At any point in time that could change, just like we took out this high and it changed. But I mean, realistically, if we take out this high, we're at new all-time highs. And then after that, we can start looking at the really high actual prices for oil. But right now, we're not seeing that indication. We're seeing all red histograms on the monthly. We're seeing the Stochs powerfully angled to the downside after the hard sell signal and the exit of the bullish control zone. It's everything we want to see to be bearish on an asset. The 821 are about to cross bearish here. We're back testing the 200 simple and 200 exponential. I would expect us to find support somewhere around here and attempt to stop that cross from happening. Now, we've kind of already been attempting that, so maybe it's already done. At some point in time, we're either going to push up here and, it's going to save the cross, or we're going to get rejected and we're going to see the cross take place, and that's probably going to be the catalyst that takes us down to like $65 oil, which is what I expect. Now keep in mind though, I am still very, very bullish on oil. Even though the 200 simple is above the 200 exponential, as long as we're above the two of them, and as long as the slope is blue, and matter of fact, we got very bullish on oil back here on the 821 bull cross right here. I'm still bullish and everything, but if this red cross happens right here, I'm expecting it a little lower, and then we'll look at somewhere down here as a potential buying opportunity. And obviously this is just the underlying. That is not necessarily the case for spot markets. I'm sorry, for like producers. All right, so Dow Jones next. So on the daily, we're at that neckline equivalent, the 200 exponential and simple. As long as we're at this area, we're in danger. So this looks like a double top to me right now, or triple top, whatever you want to call it. Regardless, we have, you know, a big hump right here with a neckline. We have another big hump right here, you know, which is basically a little mini double top. You know, Eve, and then a rounding Adam. Nope, the other way around. Adam is the pointy triangle, and then the rounding is Eve. So we basically have a top, then we have a double top, and then that double top forms a double top. So there's like double top inception going on right here. In my opinion, we're threatening this very, very heavily right now. This was a nasty close to the week. We had the 821 cross down red. We flipped the 200 exponential red, and the 200 simple, we're still above it for now at that 32,350 level, but that is not what you want to see. And again, this looks like that very clear rejection we always talk about. Slope line starts to, or I'm sorry, histogram breaks down, turns red, slope line still blue, and then finally flips. We come up, we try to test it, we don't get there, we come up, try to test it again. The rejection, you know, it doesn't always look beautiful where we come up and hit the line exactly. Sometimes it doesn't do it the first time, it does it the second time. But regardless, we see that clear rejection. We're trying so hard to reclaim it. We even do for a little bit, and then it just rolls over. So not cool right here, guys. Not cool. Definitely worth paying attention to what's taking place in these markets right now. We have literally spent, you know, I mean, since November, the beginning of November is when we broke above the 200s, and it started to look pretty bullish at these levels. We came down, we found support, we flipped them both bullish, everything looking good. And then what happens? The lower high, you know, and then it develops into a double top, which forms into a, you know, macro double top. Now we're threatening the neckline. So all of a sudden, the picture doesn't look so clear. And we've been talking about it. It's not like all of a sudden we're flipping back and forth or anything. We've been saying for literally months that the markets right now, I'm the least certain on direction in these markets that I've ever been. When I look at the fundamentals, I think, how could we possibly go higher on risk on assets? And then when I look at some of the other stuff, like, well, what if inflation picks up and then we go back into, you know, 5-10% inflation environment? What if we see new inflation, you know, highs or something like that? Is it possible that that could cause stock market to rally? Is that cause earnings to go up, multiples to go up? Well, yeah, it could actually. So the truth is, I could build a strong case fundamentally and technically for most asset classes right now. Now, some just look like total shit. I mean, some just look like absolute crap. Like, let's be real right now. If you, after all of the price action that's happened in the markets, I mean, I don't want to sit here and, you know, hold your nose and force feed you this reality. But the truth is, if after everything that's taken place right here, like, your asset's not at least threatening the 200 moving averages on the daily time frame, it's total trash. Just go ahead, stop digging through the trash, stop scraping around for somebody else's leftovers. Whatever it is, it's gross, it's rotten, it's moldy. Just throw it away and move on. Okay, I'm talking to you pot stocks. There's lots of other cryptos and stuff like that as well. But let's just be real, okay? So that being said, I mean, this is it. This is the line in the sand for me. While we're between the 200 exponential and simple, it could still go either way. That's fine. But if we start breaking back down, if we lose the 200 simple and break down back down below it, I fully expect us to at least threaten the 200 moving averages. So that's it. This was a tough resistance right here. We tried to poke above it a couple times. We kind of did. And then finally we ended up breaking down from that triangle. And now we're threatening. You know, if you want to do, depending on how the measure move was, obviously the measure move, if we would have broke to the upside, would have been nice. The measure move, if we're going to break to the downside, I like to use the meat of the pattern. If the measure move is to the upside, you technically are supposed to use the lead leg. So the measure move to the upside on a positive break, which is more probable, is much, much better than the measure move to the downside. Somebody was asking about that in the group. So break down to 200 exponential, measure move would take us down to about the 200 simple. If we start closing down here, I mean, look, the best thing we could do is to just step back out of the markets or, you know, hedge, whatever, but just go much more risk off and let the market tell us what's going to happen. Because the truth is, this could have been some serious distribution taking place before we do another leg down. And then all this is going to look like is basically, you know, topping distribution through here, a breakdown, a push back up, more redistribution taking place, you know, breakdown again, new lows potentially, you know, and we've talked about some much lower lows on different time frames here. So let's switch out to the longest time frames, or longer time frames rather, and have a look. So on the weekly time frame, we see the 8 and 21 very, very threatened right here by that weekly candle. Let me move my cursor so you can actually see. Seems very, very likely we're headed back down here to retest the 200 exponential and simple. That's not necessarily a bad thing. This could look like, you know, a left shoulder neckline, or I'm sorry, a head neckline right here, a little slanted to the upside, right shoulder a little higher than the left shoulder, and then we come back up, we break through the neckline, measure, move, new all-time highs, everybody wins, assets soar, come rockets for the whole crew. I mean, just all kinds of good stuff, right? Or, you know, we break down from the 200s and it starts looking really, really bad. Obviously, we've seen that happen a couple times in the past. We've talked about how serious that is. Looks like price action is rolling over. We're still above the slope line. It is blue. We did exit the bullish control zone. Hard sell signal. We know what that means, okay? Risk off, obviously. So if we go to the monthly here, this was a big, big development on the monthly. We broke down. We crossed the 821 bearish. We pushed all the way back up. We were holding above it, and then we close. I mean, we don't know yet. 2 days left. So if we close back below the 21, right where we're at right now, it's nasty. If we close back above the 8, we're at least holding on to that support for now. But to tell you the truth right now, this to me looks like price came down here. We broke key support. We pushed up here. Some people exited their position, shorted, whatever. We pushed down to new lows, and then people got caught upside down in their position from here because they thought we were going higher. So they pushed the price back up, distribute their position on the suckers, the retail, the retards, you know, whoever is buying, I don't know, not actual retards, but, you know, and then after that, I mean, we'll see, but it doesn't look good. You know, any hope that we had up here when it was looking good is starting to evaporate very, very quickly. And again, we see that same signature, you know, breakdown, bunch of red histograms, red slope line. We push up here. We don't see the rejection all the way up here because we just didn't have any momentum, but we're already seeing it starting to roll back over here. So if the next month is probably going to open red, this one's going to finish red. We're going to have 2 potential red months in a row. We won't technically know on the monthly for another 30 days after that. So, you know, obviously we'll be waiting, but it's going to look like basically the stochastics came up here and got rejected. The histogram came up here and got rejected. The 821 bull cross happened and got rejected. I mean, and then after that, it's hard to deny that, you know, I mean, you know what it is. So we'll see. Everybody will be singing a different tune, I promise, if that continues on. So SPY already at the 200 simple right here, much less bullish, barely if ever flipped the 200 simple bullish right here. So we're already technically back in a bear market. The 200 exponential and simple are both red again. We're holding on to them for right now. The 821 daily bear cross already happened. All red histograms lost the slope line below the 0 line. Yuck. Hard sell signal left the bullish control zone. I mean, it was all there, guys. It was all there. It was all there. I mean, bearish divergence between these 2 big points right here. Bearish divergence all over the place on daily charts, on weekly charts. I mean, let's be real. The Bitcoin bearish divergence, we'll talk about that. So SPY, again, the 821, we flipped it. It's coming back down here. We're losing the 21. Seems like we're going back to the 200 exponential and simple. Momentum still picking up here. Nice little push up off the bullish divergence, but couldn't really do anything with it. Spent an awful lot of energy. We went nowhere. Okay. We're running in place. The SPY is on a treadmill. You know, it's burning calories. It's burning exertion, effort, whatever, but it's not going anywhere. Okay. And that's the difference between when the indicator oscillators and the price action are actually like corresponding with each other, or we see that divergence. When we see that divergence between price and the indicator oscillator, it means somebody's on that treadmill. Somebody's putting in work, but we're not going anywhere, or vice versa. You know, vice versa. It's, you know, instead of running like against the treadmill or whatever, it's like when you're at the airport and they've got, is it still called an escalator when it doesn't go up? I feel like escalation has to take you up. I don't know what the things are called. And you know what? I think they only have them in American airports. So half of you guys might not even know what I'm talking about. But it's basically just, instead of like walking, if you're just so fat or so lazy or whatever your reason is, you know, maybe you don't have legs, maybe you just, I don't know, don't feel like it. But essentially, it's just an escalator, but instead of taking you like upstairs, it just goes straight. No elevation, no like added benefit or anything like that. So just imagine walking as this thing is going in the same direction. So that's what happens sometimes with your divergence as well. You're getting propelled by this thing as you also walk forward, but we're seeing that divergence between the amount of effort it takes and the amount of distance you cross. And that's how I look at the indicator oscillators compared to price action when I'm looking for divergence. So that being said, monthly SPY, this looks like a very, very clear rejection. So we get a strong move down, we come back up, we try to cross the 821 back bullish, never happens. Rejected, rejected, rejected. Eventually, enough rejections and you just give up. We've all been there before. Come on. You have a bad night out. No matter how many times you try to holla, just doesn't work. You call it. We've all been there before. You might even order some food, just eat some chicken wings in the corner, fuck it. So that being said, SPY is looking like that night when you throw in the towel and just say, you know what? I'm going to grab some chicken wings. I'm going to drink this beer. Not going to worry about the holla game. So that's what I'm seeing. We'll see how it plays out. Obviously, we got 2 days that could change potentially in that time, but seems very, very unlikely as we've had, 26 days to do what they want on these charts. Triple Qs right here. So we broke out that descending resistance. We finally got above the 200s. We got back on top of the 382. Everything was looking gravy, and then boom, rolls over, showing weakness, barely holding support. 821 bear cross about to take place. All red histograms, losing the slope line. Guys, let's be real here, okay? This area right here, granted, sure, okay, yeah, buy right here. We had some nice trades to the upside. Everybody made 20%, 30%, 50%, 100%. Sure, okay, that's fine. We crushed it for a couple months. We had some nice bullish trades. It was easy, okay? But let's be real now. We know life's not easy. And we know if life's not easy, the markets definitely aren't fucking easy, okay? This is the most competitive place there is. So that being said, this was nice on the way up here. This is the exact opposite scenario right now. If this was looking like a bottom to us and it was worth a scalp opportunity on a bunch of these assets, this is sure looking like a top to me right now. So we'll have to see what happens. The key on all these markets is not if they break down. The key is if they can put in a higher low swing. That will be very, very important. If they use up all their effort and push down and get rejected and go much lower, but they never take out those lows, this market could still potentially look bullish. Now, it's not as good as if it holds the 200 exponential and simple, but it's worth noting that, the market often looks the most bullish right before it goes down, or the most bearish right before it goes up. Now, that being said, on the monthly here, the old triple Qs, the NASDAQ, the TechSAC, 821 bear cross, clear rejection. This is a rejection candle with a rejection at the moving averages, very similar to what we saw right here when we attempted to stop the 821 bear cross from taking place. Are we hearing the same things over and over again? It's almost like no matter what asset we look at, no matter what chart it is, no matter what time frame it is, we see the same exact things over and over and over again. So if you, like me, can start to pick these things out, identify these things, whether it's a candlestick, whether it's a candlestick pattern, whether it's Wyckoff distribution, whether it's moving average crosses, whether it's Fibonacci retracements, internal or external, momentum, whatever it is that you're looking at, if you can start to identify these patterns in the indicators, in the oscillators, in the fibs, all this stuff, I'm telling you right now, that's your edge. You have an edge on the market right away. That's all you got to do. Now, sounds easy, sure, but you got to keep your bias out of it too. And sometimes you got to admit also that you don't know. You don't know. Sometimes, what's that old saying about sometimes you're bullish, sometimes you're bearish, and sometimes you go fishing? That's the realest shit ever. So we'll see. Russell, last but not least of the major indices, still on top of the 200 exponential. So the Russell was actually the most strong or the least weak all through here when it didn't take out that low and then put in a substantially higher low along the way. And now we put in the high right here. We didn't take out that high, but we're still above the 200 exponential. Now it is getting 821 cross. We are seeing all the same bearish signals from the old Russell. Russell's obviously trash. We know that. I know that. You know that. Everyone knows it. The only reason anyone buys in to the Russell, the only reason anyone wants a piece of the Russell is because they believe all the old BS that has happened in the past is going to happen again. They think that growth trash in the Russell is going to lead us out of this bear market and it's going to outperform, which they would be right if we were going back into a risk on environment like we've seen in the past and all of a sudden money was going to go back to being free, but it's not. So instead, this thing is going to roll over like the zombie it is. It looks like absolute trash. Again, rejection still above the 21. So it does look better than some of the other major indices, aka SPY and the triple Qs, the NASDAQ, the TechSec, but likely to get rejected in the same way. It does, again, have a little bit more momentum than those other indicators do. But we also have this huge cluster of support all through here. This is a big factor on the Russell that nobody like takes into account or cares about or knows about. And it's just this. It's this massive, massive cluster going back to like 2017 when the Russell comes up here in 2018, puts in a high, doesn't put in a new high in 2020. So this thing has literally been trash for 5 years. Sold off, moved up, underperformed everything, went full distribution mode, Wyckoff type 2 distribution, all up in your face. I mean, full on bukkake breakdown. And then after that, I mean, let's be real. There is a lot of support through here, but if it holds that 1700 level, but this is all just support through here. So we'll see when it comes back down what happens. I would not get overly bullish on the Russell. I mean, everybody else did. That's the only people that are in the Russell right now are the ones that were trying to beat the market and be slick. And, you know, we know what that's all about. So we're not going to look at any of that stuff. Boom, boom, boom. Let's keep on rolling. All right, so DXY, very, very important. The second half of the tag team, okay? The most epic tag team in all of existence. The tag team that literally suplexes the entire world, okay? If you're looking to get DDT'd, if you want to get suplexed off the top ropes, you want to get the backbreaker, okay? You want to fight in the cage. The Royal Rumble, this is where it happens. It's the DXY and the TNX. It's the tag team game, okay? If these things go back into a bull market, which we've already seen the 2-year, breaking out to new highs, 10-year threatening the highs. I mean, literally like, 100 basis points off right now. And now we're seeing the DXY, which was very, very weak for the last, I mean, it's been months now. We flipped bearish on the DXY back in October of 2022. Got bullish again back here in February 2023 with the 821 daily cross for the retest of the 200 exponential target hit. And now the retest of the 200 simple, 106.56. If and when we break above that level, consolidate here, move higher, if these two things are going up, it's going to be very, very difficult for other markets to continue to the upside. Risk on or speculative assets will get decimated. Bullish divergence played out beautifully. So we've seen a lot of bullish divergence playing out. We've seen a lot of bearish divergence playing out. The markets have been very predictable and very reliable. Okay, so we should just keep trusting them because honestly, I mean, they're not really lying to us. They might be a little confused at times, but they're definitely not lying. So weekly, 821 bear cross, got bearish obviously for that. Hard buy signal, multiple green histograms, exiting the bearish control zone, push to the upside, break back above the 8 and 21. We hang out here long enough, they will get the bull cross again, and we will go back into a confirmed bull market. We're still above the 200 exponential. It's on top of the 200 simple. Both are blue. We've been very, very bullish since around November of 2021 on the weekly, and we're still very, very bullish. This is healthy price action. We go up a ton, we come back and give some of that away, and then we continue to the upside. If and when we rotate right here and put in a lower high, then we break down, it's going to look like we're coming back down to that 97 level or whatever, and that's completely fine. So we have the internal retracement on there right now, but I do want to pay attention to this as well. Obviously, a lot going on here. Let's just take that off really quick. So we can see the 236 is here at 108. That was the breakdown, and the 0.5 is where we touch. So we gave back 50% of this rally to the upside, okay? Dow theory, you know, you have a impulse to the upside, you give back 50% of that, and then you continue with the trend. So Dow theory literally playing off to the penny. Okay, we got back above the 382 after seeing some resistance, and now it looks like we're going to come up here and retest the 236 as well. Still very, very bullish looking chart. And then let's go to the monthly. And obviously we know once this flipped bullish right here, once the 200 exponential cross above, that's the first time the back test and support, we move to the upside. And then through this area, we basically see a 200 exponential and simple flip back blue again. One more retest on those levels. And I mean, this thing has been parabolic since then. Breakdown, retest to 21, back test in the 8. If we get rejected here, lower high, again, probably headed back down to that 100, 98. But if not, if we close this monthly here in the next couple of days and we just consolidate a bit, I mean, it's just a matter of time before we go higher. Hard sell, leaving the bullish control zone, not necessarily a good thing. Bunch of red histograms, obviously pretty violent blow off top right here. You know, V top, atom top, whatever you want to call it. So we do need to still look out for this. But I mean, it's not crazy to think that everybody was very, very bearish on the dollar and then all of a sudden everybody's very bullish on the dollar, and now everybody's bearish on the dollar again. So it's not crazy to think that we could have these very spiky moves and still go higher. I mean, this was the key area to come back and basically test, was these previous two tops. So we have clear resistance here. We have a lower high. We break through that lower high to a new cycle high. We back test. It's called building structure, folks. And honestly, that's what you want to see. If we just go straight up or straight down, we end up looking like Binance Coin with a giant air pocket, just asking to get our dicks kicked in. And I'm not talking about that weird fetish stuff that people like. I'm talking about the bad kind of getting hit in the dick. So Tesla's next on the daily. So obviously we had some nice trades play out here. A little pat on the back for everybody who got in on that. You know, up to 100% in some cases. Even the second trade was like 60%. Beautiful. Hit the 200 exponential and simple. Back test the 236. Looks tired. Kind of going sideways here. The cult is all in on Tesla again, the same way they were all out down here when we were buying their stock, and now they're buying ours at the top. That's fine. A bunch of red histograms, hard sell, leaving the bullish control zone. Looks like it's ready to roll over here. Let's take a look at Tesla on the longer time frames, because it was looking pretty nasty there. Reclaimed the 200 exponential and simple, so weekly looking much, much better than it has. Momentum still in its favor. So honestly, Tesla looking okay on the weekly. On the monthly here, though, it looks like absolute dookie. Okay, this is the last thing you ever want to see on your chart right here. The only thing that could possibly look worse than this is if this was happening underneath the red 200 exponential and simple moving averages. But obviously we don't actually have those on the monthly because, well, Tesla only goes back to 2010. So that being said, we know we're above the 200 exponential and simple. They would obviously be under price action. But right now we have the 821 bear cross, the breakdown. We've seen that a couple times in the past, and it actually didn't get that disgusting. Of course, I say that when we're looking at like this chart here, but it was another 50% after the cross. I think we've already beat that, but we also went absolutely parabolic right here. So when we start looking at these technicals and we look at what Tesla's doing, it's basically trading like clockwork. So we have our green bottom right here. We have our blue bottom right here, depending if you're fibbing off of this to the macro high, or if you're fibbing off of this to the macro high. We got our two different fib levels. So we broke down from some key levels. We retested the 382 in green and the 0.5 in blue perfectly. Again, Charles Dow theory and also fib playing out right here. We push all the way back up to the blue 236. So at this point in time, the green is important. It is definitely important. But clearly the market, clearly the algos are using the bottom swing from March of 2020, aka the Rona lows. Clearly, because we see a perfect touch. I mean, let me turn off this tool real quick. Look where that wick is right there, okay? The perfect touch of the 0.5, the perfect back test of the 236, retest the 8 and 21, get rejected. Next target's the 382, the pushback down here. You know, so the same way we were long on the way up, now it's time to, you know, potentially get short again, whatever. You know, obviously none of this financial advice unless you want to live in a van down by the river and all that good stuff. Very, very bad though. The last thing you want to see is under the 821. And this basically looks like a pushback up, likely a rejection, and then rolls over to new lows. I mean, at that point in time, we've already hit the 0.5 and 382. So that's the juicy spot, okay? You can call it the golden zone, call it whatever you want. It's the 0.5 in green and the 618 in blue. And mathematically, statistically, thanks to Papa Fibonacci, they line up in exactly the same place. Is it a coincidence? Is it just how the universe works? Is there beehives and seashells and all that cool stuff? Whatever. You can believe in whatever you want to believe in. The fact of the matter is the charts don't lie, baby. And the charts are telling us the likely target on Tesla is sub $100. That's right, $70.41. Love it or hate it, Tesla bulls, Tesla bears. I don't give a damn. I just tell you how the charts look, okay? I know for a while there, people were like, I can't believe you like Tesla now. And then we like double our money on the Tesla trade. And now it's like, you fucker, you said you liked Tesla. That's the beauty, guys. We don't join cults, okay? We're cult free. All right? We're in the cult of something, but it's not a cult. It's like a silly cult. Cult of entertainment. There you go. So Microsoft is next. So obviously the AI pop took us up here above the 200s, smack down, back down below the 200s. Both flip red again. The 821 bull cross on the daily, likely to turn into a bear cross very, very soon. All red histograms, red slope line, hard sell, left the bullish control zone. It was all there, folks. It was all there right in front of our faces. So again, very important thing is when and if we come down here, when we push down, when we get that next thrust to the downside, we need to see a higher low, or this is just going to look like trash city. Okay, as we have a high, a low, a lower high, a lower low, a lower high, a lower low, a lower high, and then the next thing to come after that is a 10-second delay. That's right, lower low, correct. All right, and then when we go to the monthly here, again, we see a dirty, nasty, nasty rejection right here. I mean, if this isn't a shooting star, I don't know what is, ladies and gentlemen. We have a rejection wick at the 8 and 21 moving averages. We're literally pennies away from closing the Microsofty red. All right, so if it doesn't get some blood flow right now, it's going to go into a Microsofty and break down and likely retest the lows at about 230. Honestly, though, it's probably going much lower. And we start turning on the Fibonacci's here and we start looking at key swings. You know, we basically have that Rona low right here at like 132. We retested the 0.5 perfectly. We came all the way back up to 236. We rejected that. Oh my gosh, this is so weird. I'm having like crazy deja vu right now. Is there a glitch in the matrix? Did you just see a black cat? Was it the same black cat? Oh my God. I mean, it's the same shit over and over. I know it's super boring. You're like, you never do anything new. You just do the same stuff and it works. And I'm tired of it because you're boring. Well, I'm sorry. That's just how we do it, guys. Consistent and it works. So there we have it. Same exact signature we see from Tesla playing out in the Microsofty right here. Now, could the blood flow pick up? Could this thing get hard again and micro hard shoot up to the upside? Sure. Maybe some AI comes in here, hacks the chat, whatever. Starts spam botting for Microsoft 1236 or whatever. Or no, I think that's Amazon fake crypto. So yeah, that being said, I mean, looks exactly the same. So clear rejection. Could it change? Sure. Microsoft closed above 257 in the next 2 days. By all means, we could say, all right, I'm neutral-ish. I'll give you that. But not looking good right now. Not looking good. Apple got back above the 200s, broke that down below the 8 and 21. So it's below all 4 moving averages right now. I mean, seems more likely than not headed back down to like that 140 level. When we switch out to the weekly, it looks much better. Front run of the 200 exponential on simple. I'm sure that was Mr. Buffet swooping up the goods. He's running up, taking all the crab legs so nobody else can get any. Thanks a lot, Warren. So that being said, Apple here at the 821, trying to stop the bear cross from happening. So far, it's working for now. For now. But not looking so hot, honestly. I mean, not looking hot. This is not what you want to see. This isn't a convincing stop of the bear cross. It's more like a pathetic attempt. Turning the way of the Microsoft, just rolling over here. Doesn't look good. These markets do not look good. Red slope line, all red histogram, Stokes powerfully angled to the downside. I mean, all that bullishness, and we couldn't even print any legitimate like momentum, like anything. So Google just looking absolutely terrible. I mean, honestly, we probably won't even get through this stream. Google's probably gonna have to cut the feed because the company's trash. It's obviously just rolling over, going straight to zero. I mean, according to the chart. The actual company might be great. You know, I'm sure if you're listening to this and you work for Google or your AI or whatever, no offense, I like you. You are cool. I am very appreciative of the platform. All right, hopefully that was enough. So that being said, the stock, though, looks like complete trash. I mean, completely just melting down, highs, lows, lower highs, lower lows, lower highs, lower lows. At the lows now, I mean, a couple dollars off the lows. We've got this little ascending support right here. This pathetic little white line, this little ascending guy right here, kind of holding up price for now, okay? We got this channel we've been operating inside of. I know I've been saying every time we come back down to the bottom of the channel, I buy it, make us a quick little 13%, and then we bust our nut right here at the top of the channel. It's starting to look a little sketch this time. I'm not going to lie, guys. The weakness in Google is ridiculous. Am I still going to take a shot at it? Yeah, probably, because the risk reward's there. And, you know, if it works, why not? But, you know, the first 2 times, probably good. Third time, probably going to be the, well, third time's a charm, I think is how the saying goes. But in trading, it's the opposite. Once something happens twice and like very clearly, the third time it like does not hold. Like, I mean, maybe not. It's all anecdotal. Oh, let's look at a long time chart. Let's guess in advance. What do we think it's going to look like? Trash? I agree. We'll take a look. Oh, yeah, definitely trash. 100% trash. And you're like, you looked at it ahead. There's no way you could know that Google looks like trash. Well, I mean, come on, guys. 821, bear market, disgusting, rejection. I mean, this thing looks like it. The only thing this could do to look even more bearish than it's looking right now is to just go down faster, which it's like, come on, guys, be patient. We got Slinky Theory in full effect. At the lows. I mean, this thing looks ready. Are y'all ready? Are we ready for this? Are we ready to retest January 2020 highs? Google's been staying strong. There's been the whole AI push and the whole YouTube revenue and all the reasons why Google was so much stronger than everything else. But you know what? It's your time, Google. It's your time. 618 is at the peak of the 2020 highs. It's slightly higher. So that seems like the next area that we're going to pay attention to. So you know what? Somehow Google skirt this entire time without getting, that's right, the dirty yellow line. Not this time, Google. You got it, okay? Matter of fact, let's clean this up a little bit since the price action's just moving right into our targets. I mean, look at this beautiful technical support off the 0.5. And this is how you know Google is just weak sauce. The wick up here on Google, look where that is, 108. Now you can't tell because the measure move thing was in the way. Let's get rid of that. But that was up to the 21. Didn't even get to the 236. So just like Tesla, just like, what was the other one? Microsoft got the move up here. Google's move up here was just this pathetic rejection. Didn't even get to the 236. So underperformed substantially just off of that peak. Should have had another 8% in the tank, but it doesn't because it's weak. Shit's weak. All red histograms, red slope line below the 0 line, bearish control zone, 821 bear cross. Damn, Google, you looking good. Not. You are not looking good. All right. Let's talk about Meta now. Okay, so we slapped this little meta trade setup in play right here. I did not take this trade setup because I just prefer to just keep my hands out of Meta's dirty little pockets. But that being said, you know, we had this basically just massive gap up based on some AI BS, whatever. In my opinion, it was at clear resistance. It was at a key level. It was after this. I mean, it was clockwork. Let's be real here. So we broke up to this level and now we're playing back out here. We're coming down to retest the 200s. Still looks better. The 821 are still bullish across technically, still above the 200 exponential and simple, even though one is blue, the other has not quite gotten there yet. All red histograms. Honestly, we oftentimes will see a bounce around this level. It shot right through the slope. So maybe we're not going to see a bounce. Maybe that was the bounce. I don't know. Seems like this, realistically, it's coming down to 155. Seems very, very likely. Let's go to our longer time frames. See how this thing looks. So obviously had a nice bounce here. Again, like clockwork, if we just go back to that 2012 low, what? A lot of you guys weren't even born yet, according to the statistics. Okay. So back to before you were born. No, I'm just kidding. Most of you guys are probably much older. We don't trade options around here. That keeps out the youngins for the most part. So if we take that low in 2012 and we take it up to our macro high, and then we see what's happening here, macro high, disgusting meltdown to the 0.5. I mean, almost to a T right here, literally to the 0.5. And then we bounce all the way back up. You can't see it, but from the 0.5 through the 382, back test the 236. Oh my gosh. It's like we just hacked the system. So if that ends up being the rejection, next target's back to the 382. Maybe we put in a higher low. We continue higher. The bull market's back on. Everybody's happy. If not, you know, probably come back down to the 0.5 the rest of the way. Maybe to the 618 next. We'll have to see. Would it be crazy a year from now if Meta is at $57? Will you be like, oh my God, Meta's at $57. Can you believe it? I'll be like, yeah, actually. Yeah, it doesn't surprise me at all. Did you see the metaverse? Like, have you ever actually seen a picture of Mark Zuckerberg? Like, of course, Meta's at $57. Maybe not, though. I mean, I don't know. It's probably just great. It's probably just great and just worth so much more by then. New all-time highs. Everybody's happy. All right. Who puts the A in magma? Apple. Well, who puts the other A in magma? It's Amazon. You guessed it. All right. So here we have Amazon on the daily. And ooh, is it nasty? I mean, it's no Google, but it doesn't look good. So we did go negative for 2021. Nope. Sorry. We did go negative for 2022 on the earnings, but that's okay. It's not like they did a ridiculous amount of business or anything like that. I mean, it's not crazy to do $500 billion in business and not make money. I mean, it happens sometimes. Who hasn't had a year like that? I know I've had many, many years where I did $500 billion in business and, didn't actually make any money, but there's always next year. So, and by next year, I mean this year. So how's Amazon going to pull it off this time? We'll have to wait and see. Obviously, some job cuts, maybe. So that being said, rolling over after that last rejection off the 200s, trading very, very technically. Still well off of the lows for now. I mean, I say well off the lows, but it's like, are we well off the lows? 12%, 13%. Okay, it's not well enough off the lows that I'd be comfortable. You know, if I was long on this thing. Bearish control zone, all red histograms below the slope line, below 0 line, 821 bear cross below the 200s. Sorry, I'm throw up in my mouth a little bit there. Looking at this disgusting ass chart right here. I mean, this thing is so disgusting, I can smell it. All right, so that being said, Amazon on the monthly, disgusting. 821 bear cross. I mean, look, if there's a magnet in the market, it's the 200s, baby. We got the 200 exponential. We got the 200 simple. We got some magnet action taking place right now. So where's this thing headed? I mean, likely to the 200 exponential, 65.51. Retest those Rona lows. No, that's not even the Rona lows. That's the 2018 lows. I forgot how trash this thing has been. Oh my God, that was the back test of the move back up to the highs too. And rejection. So again, we're just looking for that next leg down, you know, which is just this leg right here, the internal retracement, and then the next leg, the internal retrace. Next leg potentially take us down here, the 1.236 Fibonacci extension and long-term fibs. I mean, what is that? That's our macro 236 at about 63.30, and that's our 1.618 fib extension at $48. So is it going to $48? I don't know. The green fib, though, going all the way back to 2001, okay? 2001 to all-time highs, and that gives us our green fib, and that is our 236 target down here. The orange fib, which is the one we're looking at right now, is 2008, okay? So that's the last tech bubble blow up where Amazon went to zero. Hang on by a thread, but close. So, I mean, not crazy to think that we're headed down to that macro 236, potentially the 382, potentially the green 236, somewhere in this cluster. But for now, I mean, $64 seems likely. All right, so that's it for magma. And they are looking like hot magma. Well, hot garbage, but, you know, same thing, right? Liquid rocks, garbage, pretty much the same. So, NVIDIA. So it did have that gap up here, shocked the markets. Everybody was screaming about the one thing that went up and everything else melted down. In my opinion, we just left a gap right here. This looks like a stop hunt, distribution, something going on here. Definitely a little shaky. Maybe it's the China reopen. Maybe it's tech. NVIDIA's dropping those buzzwords like, whoa. They're like, AI. We got the AI chips. We got the AI chips. We got the processors. We got the AI. Like, they're not even trying anymore. They're like, quick, give me some more buzzwords. They're like, NFT. No, you said the word. Oh my God, it's over. They know we're fake now. Now, I like NVIDIA. Don't get me wrong here. But if there's a buzzword king in those earnings calls, we know who it is. It's NVIDIA, okay? Decentralized finance, crypto mining, video games. Insert any other buzzword here. AI technology. So we'll see what happens here. NVIDIA, obviously, chart not looking nearly as bad as some of this other trash. Nice little bounce off the 200s. Higher low. You know, we see the inverted head and shoulders, the breakthrough, the measure move, and that's basically it. It's played out now. So we don't want to overstay our welcome in this bad boy. We did cross the 821 back to the upside. So that's okay. At resistance. You know, still looks, I mean, look at this chart compared to everything else we've looked at today on the monthly. Honestly, NVIDIA looks a lot better. It really does. So are we here in the cycle, getting ready to just go on our next run? I mean, it's possible. It is possible. I find it very hard to believe that like every other risk on asset looks like complete trash and goes down. And then NVIDIA is like the one thing that's just like, we don't care. We're crushing. I mean, it's trading at a pretty reasonable valuation. I mean, what's 135x to friends? 135 times PE ratio amongst friends? It's not bad. I mean, I like to typically find things around like, you know, the market ratio of like 20% or 20 times or something like that. But I mean, 20 times, give or take, 115x. It's not like that big of a difference. So, I mean, it's sure NVIDIA is trading at a small premium for now. I'm sure there's nothing to worry about there. All right, let's talk about these cryptos here. So we did see the Bitstamp chart basically had a nice little run over the weekend, came back down and essentially just closed the gap. Nothing crazy there. Had a nice little run. I just meant a little back test attempt to stop the 821 bear cross from happening. On the macro right now, so full disclosure, I do have a small long position open, nothing crazy. We bought the dip down here on the 4-hour time frame in the group. We were talking about it in real time, obviously. So we bought the 200 exponential. It's been moving to the upside now. Still looks pretty good. Hard buy signal coming out of the bearish control zone. All green histograms, testing the 0 line, testing the slope line, attempting to cross 821 back bullish. Macro, I'm still like bearish on Bitcoin. It doesn't look good on the daily, like daily time frame, like days to weeks out, doesn't look great. Daily time frame, like weeks to months out, actually could be okay. So this is 100% just a short-term scalp right here. Just a nice entry off of the key support level for the back test and the attempt to stop the 821 bear cross. Or yeah, that's it. So that's already happened. So now we're just in a position for free because we move our stop loss back to break even. And if it goes up, that's great. We're in this position. It's awesome. You know, we're a couple % up. Nothing to write home about. Not enough to take profits on and just give up. But if we break down, we just break even. So we're in a free trade. That's the best trade to be in. So if you get a good entry, it doesn't matter if you're bearish or bullish. You just turn it into a free trade and then let it go. And the best thing to do in a consolidation range when you're not sure if we're going to break to the upside or the downside is you get good trades as bull trades. You get good trades as bear trades. And then eventually when you break through and take out your, key level that you're, managing risk off of, either to the long or the short side, then you're just in a one-way directional trade from an amazing price. And you look like a gosh darn genius. Now, does that have to happen? No, we probably just, everything goes to zero in a flash crash and we lose all of our money. So, or you just like, quote unquote, air quote, invest in something like Celsius. Or Sam Bankman-Fried. Look how much he doesn't care. Oh, and he has an afro. Oh, man. There's just something about this guy. He's a winner. So, daily chart. I mean, we've talked about this a million times. What we're paying attention to is the bear cross 821 for a back test of 200 exponential, potentially 200 simple. What we're looking for the bullish side is to just stay above the moving averages, which looks good for now. What we don't like about this is, though, the massive amount of bearish divergence. We came all the way back up to the slope line. It's still blue. We got rejected. We have a high. We have a lower high. We have a high. We have a higher high. We have bearish divergence taking place. So there's our treadmill scenario from earlier. Again, same thing confirmed by the jewel. So we have some very, very clear bearish divergence. Very, very clear bearish divergence. If we come down to the 200 exponential again, though, it's going to probably act as support. And then we're going to look at that potential left shoulder, head, potential move back up right shoulder. And then we're going to look at this as the head and shoulders. And then we're going to look for the measure move breakdown back to the 200 simple. Is that what's going to happen? It is. We know that's what's going to happen. So does it have to? No, but in the meantime, let's just assume that's what's going to happen because, well, come on, markets. So weekly Bitcoin chart. I mean, this was the move we've been talking about forever. We obviously captured a lot of the move here. We were able to reload right here. We'll see what happens. We back tested the 200 exponential and simple. We tried to stop the cross from happening. The 200 exponential is below the 200 simple for the first time ever in all of existence of Bitcoin history. So if you were ever going to potentially be bearish on Bitcoin and all of its life, you were just looking, you were like waiting in the weeds, just waiting to like pounce on your prey like Peter Schiff. No, the opposite Peter Schiff. He's been talking shit the whole time when it went up. If he never said anything bad about Bitcoin and then just came out and was like, guys, be careful now, it's looking a little sketchy. Or if after it sold off, he said something good about it and he's like, well, at least it come down to a much more reasonable price. Literally anything ever than just always being bearish. It wouldn't just be like little Petey in the woods calling wolf or whatever. How's that go? Or is that, what is that? The wolf blows your house down or something? Peter Pan cries wolf? I don't know. There's something there, guys. There's something there. Something about Peter Schiff, okay, crying wolf. He's been crying wolf the whole time while Bitcoin melts up. Now he's crying wolf right here. And there really is a wolf. Like, we should be fucking scared. I don't care if you believe in Bitcoin, in AI, in decentralized. I don't care if you just think Natalie Brunell's hot and she likes Bitcoin. So you're like, cool. I don't go for the Bitcoin thing too. So, yeah, fuck it. Whatever. Maybe you're into Vitalik. I don't know what kind of stuff you're into. That's cool, okay? There's something about him with that kitten shirt and the robot. He's the robot. I mean, if ever, guys, okay, just be careful because this is it. There was all the people back here talking about 1,800 Bitcoin, 1,300 Bitcoin, Bitcoin goes to zero, whatever. We never lost to 200 simple. Okay, here people were scared. It was the end of the world. It was the next virus. It was the 1920s all over again. Everything was going to zero. We never lost to 200 simple. And we definitely didn't cross down below it. Here, we threatened it. And then we went parabolic. And the whole time we had the 821 bull cross. Everything was looking good. We don't have any of that. We don't have any of the good. All we have is the bad. Okay. Now we had a little bullish divergence back here, but did that already play out? We backtested 200s. We're in the bullish control zone at resistance. A bunch of green histograms above the zero line, blue slope line at resistance. So this is it. The move has played out. The truth is now, if the bulls really want price action, if they really want this to go up, if they really have a Tether / Binance stablecoin ability to just Federal Reserve it up and just print money out of nowhere, okay? If they have that ability, I fully expect to see stablecoin prices skyrocketing as they just print stablecoins to buy crypto to prop up this market. If that doesn't happen, I mean, crypto's effed. It's effed in the A, okay? This thing is going to roll over faster than my girl when I try to come in the back door, all right? So be careful on this one. On the monthly, backtesting the 821 bear cross, I mean, disgusting. If there was 200s, sure, we're above them for now. A couple green histograms. Still in the bearish control zone. I mean, this is yucky, yucky. It's not as bad as some of the other rejections we've seen, but guys, let's be careful here. Now is the time to be managing risk appropriately. Ethereum holding on for now. Everything is just doing what Bitcoin's doing, but slightly better or probably worse. Total market cap on the weekly, again, trying to, I mean, it's at the 200 exponential, so it's trying to move back up here. Again, looks a lot like Bitcoin. Looked a little stronger there short term. Bitcoin dominance against everything. Still moving up, still bullish. Green slope line, bullish control zone. So Bitcoin is gaining dominance over stable coins and also altcoins. Bitcoin dominance less the stable coins. So just versus the altcoins, again, strong, ascending, getting lifted up. We do see though, the slope line is starting to roll over and it's starting to look like that rejection we talked about potentially happening here, which tells us that Bitcoin's potentially going to be losing this ascending slope line, losing the 821 bull cross, losing momentum right here, hard sell coming out of the bullish control zone. So if we break down from here, in my opinion, with what we've seen typically, if this breaks down on the weekly, that usually means altcoins are ripping. So we're kind of getting some mixed signals right here. So either the indicator oscillators are going to be wrong and Bitcoin's going to keep gaining strength if we're going to go down, or if we're going to go up, Bitcoin's going to lead the rally. But the truth is, if this breaks down from here, it's probably because alts are strong. It's probably not because Bitcoin's weak and alts are just doing okay. You know, it doesn't have to be the case, but so Matic here on the daily above, you know, basically broke above here, came back down, retesting the 618, lost that slope line, that very key support we've been talking about, broke down to the 618, back testing support, back testing the 821 bull cross. Maybe we push up here again, reclaim it, but this is starting to look super sketch. It doesn't have to be over just yet. We could also just put in like a slightly less of an angle slope line. Like the intensity is like still there, but just not quite as much. And we'll see if that holds now between that previous low and the one we just put in. Maybe that's going to start acting and start pushing price back up. But we have to be careful on this one. Obviously, it's not going to like, you know, go to a negative on this trade or anything like that. But we also don't want to give back like all the gains. So BNB, so this one is one we've been talking about for a while. It's got the biggest air pocket in all of history, in all the markets, in all the world. So we see the blue slope line has now flipped red. We're below the zero line. We do have a couple green histograms, but no kind of trend or anything like that. It looks like the 821, it looks like these stochastics are getting ready to break back down here, potentially get a bear cross again. We lost the 8 and 21. We did get a little bounce off the 200 exponential here, but again, this sort of looks like distribution here. We got basically, you know, a little head and shoulders type pattern or just some kind of distribution here. If we break down from it, where we start threatening those lows again, if we lose those 200s, we still have the channel and some fib support at about 250. That's the key area. But remember that air pocket. Okay. You don't want to get close to that air pocket, because if you go over the edge, if you start peeking over the edge on that, you start looking into the Binance, you know, black hole, I'm going to come up behind you like Leonidas from 300, and I'm going to fucking kick your ass into the pit. Okay? So be careful. And that's hypothetical, all right? I don't have the time or the resources to come to your house, dig a giant pit, and then kick you into it. That's just not realistic. So, but also, just a heads up. I mean, in case anybody was like, oh shit, I don't know if I'm going to be able to sleep tonight with threats like that looming. All right, so let me jump back in the chat here. Then we'll look at some other stuff, and then we're going to call it right there. I don't want to go too crazy on this stream. We're having a little too much fun, okay? Google's not going to like it. We talked some trash. I said some stuff that's cancelable, depending on the platform. So, all right, where are we at? Calma Betty, Laughy Face, Yoda. All right, Yoda says, how important is the death cross between the 50-week and 200-week? Never a death cross have been had before. Here's a problem with the death cross is it's especially on like a long-term weekly like that. One, you don't have a reference point because it's never happened before. I'm assuming you're talking about Bitcoin, right? Yeah, it have to be. We don't have a reference because it never happened before. And also, like historically, whenever we've seen a death cross on Bitcoin, like on the daily, it marked the bottom. Am I saying the right thing? Hang on, let's go look at it. I'll just say stuff because it sounds good. I think that's the case. Let's just double check. I think on the weekly. Oh, wait, you're talking about the 50? I've never even heard of that before. Is that something that people use? I'm just kidding. I mean, a lot of people use it. So what is it? It's the 5200? God, I don't feel like messing with all this right now. Yeah, I'll just take your word on it. I don't want to go in here and start changing values on indicators. No. Like it's like a huge chore for me to like punch in like two numbers and then just hit enter. It's like way too much fun. But I'm pretty sure it was something like that. So for me, not important at all. But also, every other metric is going to like tell us the same thing basically. Reading a lot about the golden cross on the daily. I do everywhere, but not much about the death cross on the weekly. Yeah, I mean, the truth is like when you look at something like a death cross on the weekly, there's so much lag that like oftentimes a typical asset just basically goes up and to the right on a long enough time frame. So most assets never get to like a weekly death cross. Like something has to go like horribly wrong for that to take place. So you don't typically see it on something that's going to recover. So that's like the real risk, I guess. The reason you don't see it often is because it's extreme weakness. So once you do see it, it's most things not going to have a death cross or not going to recover if they do. Bitcoin talking about IM. Okay, we got that. What's happening, everyone, says Parag. Good to see you, brother. Humans are technically AIs. Okay, I'm with you on that. Maybe the reason for NVIDIA going up is AI needs graphic processing to run. Oh, yeah, 100%. NVIDIA is going up because of the word AI, for sure. And it's definitely because it needs graphic chips to run the same way it needs graphics chips to run, you know, gaming computers and streaming computers and crypto miners and all of the other things, you know, weapons of mass destruction, graphic cards in those too, you know, I don't know. All kinds of stuff use them for sure. But my point is that they have literally used every one of like the last like bubble / like, you know, keywords that you could possibly rock out, you know, which by all means. So Toby says, please discuss ETH or Bitcoin long-term targets, multi-year time frame. Yoda says, the boy who cried wolf. That is it. It is not Little Red Riding Hood. It's Peter Schiff, the boy who cried wolf. I think that was his first book, wasn't it? So gold is next. So gold, we have this big old descending channel. Top of the channel, we go down. Bottom of the channel, we go up. Top of the channel, we go down. Bottom of the channel, we go up. Top of the channel, we go 10-second delay. That's right, class, down, of course. And this is our target right here. The 0.5, the heart line, the 200s, the big, juicy slop fest of 1775. That was a good year, by the way. All right, silver is next. I mean, looking like absolute hot garbage. The trashiest of the metals. Silver. I mean, I don't even think there's a use case for this anywhere on Earth. I'm pretty sure all they do is just hodl this trash. And since it serves no actual purpose or anything like that, it's definitely going to zero. So, I mean, it's at 20 now, so it's almost there. Almost there. I mean, hard buy signal, bunch of red histograms. It looks dirty. It looks like it wants to go lower, guys. got to be real, real careful. I mean, as long as gold's not looking great, just assume silver looks like trash. We don't even look at it. We'll just like take the gold chart and then just make it look slightly worse. That's silver. As long as gold looks weak, which it does. So GSG, commodity index. So this is commodity and energy weighted. Hard rejection off 200 exponential and simple. Backtest of our channel that we've been acting in. Rejection starting to look like, you know, topping pattern. We have a neckline at the fib. Measure move is the next leg down to that $18 target. Maybe it gets nasty. We go to like 1650. We'll see. Nice juicy bull market. And now here we are in the bear market. It doesn't take a genius to see. Okay. All you have to do is literally not be blind. Well, I don't know. Okay. Let's just say colorblind falls into the category of blind. Let's just say you don't have any debilitating visual effects. Okay. Or viruses or like anything like that. So as long as you can see clearly with your eyes and tell the difference between colors, bull market, bear market. So I think we should be real, real careful here, especially when we're literally sitting on support. It looks like this thing's getting ready to have that drop, back test the highs from October 2021, which also lines up with stuff and things as well. So confluence. LNG. So boy, if there was ever something that I was wrong about, this is it. We did it. We were the most wrong. I mean, you can't be right all the time. And let's be real here, guys. We've had a hell of a streak, but man, was I wrong about this one. So I didn't know that Cheniere Energy had an ace up its sleeve, because when we were looking at this quarterly, it looked like it was just going to be another like trash quarter. You know, they just lost 2.38 billion last quarter. So I figure, hey, I mean, if they don't absolutely crush it, they're going to be negative. And boy, did they crush it. 9 billion in revenue, and miraculously somehow pulled off like a rabbit out of a fucking hat a net income of 3.94 billion for a disgustingly awesome 43% profit margin. Let's just compare that to some previous quarters. Negative 26% profit margin. Congratulations. 9% profit margin. There's a profit. 11.2 negative prior to that. Let's look at that annualized. Of course, they didn't update it yet because they're trash and they're taking too long. But let's just say 2022. Or no, is that 2022? Yeah, okay. That's it. That's it. They did it. TradingView did it. So when it all averaged out, they came in at 4% profit margin with that absolutely ridiculous quarter. So got to eat my words. I mean, when you're wrong, you're wrong. That's it, guys. I got crushed. They owned me. Cheniere Energy owned me. 3.9 billion. Wow. So this is it. Look down on the bottom left-hand corner, guys. You see those bright lights? You see that AI? That's my face. And boy, is there pie in my face right now. Because goddamn was I wrong on that one. So that being said, it shot up here for a ridiculous 9.75% move. I know it doesn't sound like much, but this thing doesn't like skyrocket often or just melt down. So it's kind of a big deal. Okay. Now that being said, does it give it back? Does this save the trend? I mean, I don't know. We'll see. But yeah, so that's what I get. We sat down, made a hot cup of coffee, put on our slippers, the fancy robe we stole from the hotel the one time we stayed somewhere nice, crossed our legs, and we looked at my second favorite F word, the fundamentals. And goddamn, did they just prove one more time that fundamentals are trash, that we should just use the technicals. So there it is. If there's one lesson learned right here, it's that fundamentals are useless trash. Just trust the technicals. So there we have it. That's your lesson for February. All right, so total TOT, total energy services, still holding on up here above the 200s. Not looking super strong. Looks like it's headed down here to 811. The super shell hanging on for now, still looking okay. Above key resistance, we broke out above. This thing's in absolutely crushing it. What's going to happen from here? It looks like probably some weakness is going to come in, but I am expecting this to be a potential buying opportunity. Mosaic, 821 bull cross, trying to get back above the 200s and save the trend. It was looking weak there for a minute, and then boy, did this thing just shoot up. So, but it's just been going sideways forever. We're just in this channel. There's our low from the channel. There's our high from the channel. Most of the price action just taking place right here. So until it does something one way or the other, there's really not much to do there. So AMD, so again, this is what I mean. Like everybody's all hyped up about NVIDIA, and it's like, oh no, the AI, the processors, it's all good now. And then it's like, oh, what's their, like, one of their main competitors, AMD? How's AMD look? Oh, nothing. So, I mean, is this just hype? I mean, I guess that was their breakout from earnings. That was their NVIDIA moment. I don't know. If the whole semiconductor market just starts looking amazing and holds above the 200s and just starts looking juicy, everything starts flipping blue, by all means, I'll be the first one to jump back on the semi-hype train. But I just don't see it. So Visa threatening that breakout level. We lose this level. I mean, there's still a bunch of support along the way. Slinky theory in full effect. But damn, if some of these underperformers didn't continue to underperform, which is also a good reason to bet on winners and bet against losers, not try to bet on the losers. Because oftentimes, if you go digging through the garbage, the lower you get, the more trashier stuff is going to be, because it's older in that analogy. So unless you find like something really cool, I don't know. Not really one for dumpster diving, but one of my favorite episodes of Seinfeld has to do with trash and a donut. You guys probably don't know what I'm talking about, but you should. You should, because it was really, really funny. So ACB is next, going straight to zero at the lows, the lowest lows to ever low. You guys know what time it is, okay? Not only is it time for me to get slapped in the face by this loser of a trade, but also it's time for us to head down here to the 1.382 Fibonacci extension at 47 cents. Wait, what? 47 cents? You're joking, right? I'm not. After that, it's 28 cents and then zero. And that right around zero is where I'm looking up, or no, right around the 1.618. It's not technically zero. It's 0.178. Okay. So at 18 cents, I'll be salivating for some ACB. But yeah, it turns out apparently pot stocks, after years of just going straight down almost to zero, they're still doing it. It's crazy. I know, right? So yeah, talking about bottom feeding Tilray. God damn. All right, enough said. So Lulu, again, all these things looking like rejections. Home Depot, broke down here, opened up. We technically haven't closed below the area that I was talking about, but I mean, this is it. I mean, this is the line in the sand, because if we break down any lower right here, we're looking at like 277. So had all the opportunity in the world to just soar, to spread its wings and skyrocket. Couldn't even fly close enough to the sun to melt those wings like Icarus and plummet back down to earth and to its inevitable death. Instead, didn't even get off the ground. Didn't even get off the ground, okay? It was like the kite that wouldn't fly. You take it to the beach, you get all ready, everybody's excited. It's supposed to be a windy day. You get out there, you just look like a bum, running around all greased up with suntan lotion, trying to get a kite to fly with no wind. That's Home Depot. All right. Man, these analogies are on fire right now. I know what you're thinking. You're like, no, I normally don't understand how the markets work, but analogies about greased up people trying to fly kites just really hit home when we're talking about Home Depot. I know, right? Airbnb on the daily. I cracked myself up. I mean, this is it. We closed the gap. We did it. Oh, look, we did it. 3.6% stop loss, 11% downside. Yay. Oh, close the gap. All right. So now what? Well, we're back at the 382. Looks like a pretty clear rejection. We're above the 200 exponential and simple for now. I don't know, guys. Probably going to come down here and test these. I find it hard to believe that Airbnb is going to be the one thing that just continues to the upside and just crushes it. It's probably just going to look like trash. So, we talked about how all the price action took place above this level, and then all this price action took place below that level. So getting through this level anytime in the future ever is going to be very, very difficult. And it also just happens to be the 0.5, the Charles Dow, aka the Chucky D. So that's going to be rough. Hasbro going straight to zero. We talked about this one. Trash toy company. You guys should definitely get a piece of that if you want to lose all your money. Neo, again, trash right here. Trash, complete trash. The same exact setup. Ascending support line right here. Breakdown, retesting the lows. Neo is at the lows, but the China, the reopening, everything's great. The bottom is in. It's all going to go up, just like with the U.S. and the goods and the services and all the blah, 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 blah. That's my Charlie Brown teacher impression. I might still do a video on this. I haven't got around to it yet. I meant to do it already. When is this earnings coming in here? The 1st of March. So we still have time. Maybe I'll do it, but we'll just do a little spoiler right now. okay, to get your chompers all moist and salivating for this. Let's be real, okay? All this thing does is just consistently lose more and more money. I mean, to the point where it's honestly impressive. 287,000 loss in Q1 2022, 415 in Q2, 600 in Q3. Okay, let's check out the annualized. Look at this thing. So it was a bleeding money. I mean, bleeding, hemorrhaging money. In 2019, we know a certain, government may have stepped in and, took some partial ownership. Negative $1.6 billion. Negative $812 million in 2020. So not bad, right? Negative $1.6 billion in 2021. And now, what are we looking at? I mean, we're looking at probably, that's a negative 1 billion right there. And then toss a little 287 on top. So we're at like 1.287 billion negative. I mean, so are we looking to break records here? Last year, 2021. I mean, not like last year was 2022, but the year that ended, because the fiscals and the calendars, 1.6 billion loss in 2021. 2022, they don't even have to do much, okay? They don't have to do much to just lose more money. So, I mean, if you liked them when they were losing 1.6 billion, you're going to love them when they're losing 1.9, baby. I mean, so look for that big 2 billion. I don't know if they're going to do it. Let's not get too excited. They might pull a Cheniere Energy and just come up with like $4 billion in positive and the net, and then the thing shoots up to the upside. And you're like, you lied to me. It wasn't a lie. I'm just wrong every once in a while. I promise you. So, I mean, looks like trash though. Based on the price action right now, that we're at the lowest low we've ever been at, literally the cycle low to the penny. Okay. I mean, well, there's just a wick right here, but don't worry about that little guy. That had some momentum behind it. This is just there, sitting at the garbage zone, just getting ready to get a hot dump in its face. And where's NEO going after that? I mean, we already hit the $8 target. That was it. That was the big excitement. Okay. Wow, we didn't quite get there. That wick was close, but look, if we get down to $8.01, I'm counting that as target hit. I mean, we kind of already hit it right here, but really this box should have been down here. I don't know. I might have been drinking that day or something. I was a little off. So we'll still kind of count it, but come on. Everybody knows I'll be much happier if we hit the 618 perfectly. But how does NEO look? I mean, pretty good, right? Let's look at this thing on the monthly and see why everybody's so excited about China. Because goddamn, between China and EV, I mean, if we just put the two things that people are most excited about, with the exception of AI, but let's just say this is powered by AI at least a little bit. I mean, I would imagine there's some AI in there, okay? So AI, electric vehicles, and China, based on this one chart right here, look like shit. So, I mean, we could be wrong. This clear support right here. I mean, but damn, we're about to close the lowest monthly low we've ever closed since we put in the all-time high. So, NEO, long-term investment? I guess we'll never know. If I got to tell you, you can't afford it. I think that's it. I don't want to look at this other stuff right now. I don't really feel like it. Yeah, okay. All right, we'll call it there. I got some other static videos planned. Obviously, I'm a very, very busy man. I'm actually not as busy as I am just not really excited to do tons and tons of videos all the time. I mean, but in the group, we post lots of charts and we do this stuff and it's fun. All right. Waiting in the weeds and ready to pounce on Bitcoin. I mean, we rode it up pretty nicely on that nice little run up. But the truth is, man, I mean, the easy money already happened. You make Sunday evenings worth it. Oh, thanks, Hex Evolve. That means the world to me. I'm glad you guys enjoy it. So to each and every one of you out there, if you haven't smashed up the like button right now, now's the time. As we bring this stream to an end, I just want to say thank you all for tuning in. Appreciate each and every one of you. And we would not have hit the 1,000 subscriber milestone if it wouldn't have been for each and every one of you. And I literally mean that, because for a while we were at 999 and then we finally hit 1,000 and someone unsubscribed like a little chump. Actually, it was probably a chimp. I've been pretty mean to the silver guys lately, so let's be real. It was probably them. But that being said, like, subscribe, all that good stuff. Wednesdays stream 8 p.m. Eastern Standard Time. Look out for those static videos coming to you. I'm looking to do like 2 or 3 a week from here on out. I promised that once I got up to, well, I mean, I promised myself, so I can just pretend like it didn't happen. But, well, now you guys know too, but that I would start actually putting a little more effort into the channel again. Now that we're at the smooth, cool 1,000, so we'll do that thing. But yeah, appreciate all you guys. We're going to wrap it up there. Remember, this is not financial advice and not your financial advice. You do markets are extremely volatile. Please do your own research, trade responsibly. This is not financial advice. If you do listen to these things for anything other than entertainment purposes only, I mean, obviously you'll just lose all your money and then you'll be living in a van down by the river. And nobody wants that unless you do. And then just have better goals. Honestly, you're better than that. So yeah, that's it. That was fun. All right. Later, guys.